This is the Net Group Investments Insights Podcast, where one or more of our experts explore a variety of views and insights that investors care about.
Hello, I'm Trevor Garvin from Net Group Investments Multi-Manager. Welcome to this week's market and economic wrap entitled Rand Strength Continues on the Back of Record-Breaking Market Returns. The world has been gripped by escalating anti-government protests in Iran, which have turned deadly with hundreds reported killed and a nationwide internet blackout as tensions rise between Iran, the US, and Israel. At the same time, US foreign policy dominated headlines after President Trump announced a historic $1.5 trillion military budget proposal and oversaw a dramatic operation capturing Venezuela's leader Nicolas Maduro, signaling a bold geopolitical stance. Meanwhile, technology and markets saw a major shakeup as Alphabet overtook Apple to become the world's second most valuable company after Nvidia, while defense stocks globally surged amid global uncertainty and the increase of conflict. South Africa faced a mix of political and environmental challenges. BRICS naval exercises off Cape Town stirred geopolitical debate as the country deepened ties with Russia, China, and Iran, testing its strained relationship with Western powers. Domestically, devastating wildfires have swept through regions like Mossel Bay, Franschhoek, and Dunoon, leaving thousands displaced and prompting urgent disaster responses. On the economic front, South Africa lost its position as Africa's top car manufacturer to Morocco, sparking concerns about competitiveness, while discussions around interest rate cuts and infrastructure resilience dominated financial circles. In a key development, South Africa issued its first infrastructure and development finance bond in December. The 12 billion rand issuance was oversubscribed 2.2 times, signaling strong investor confidence from both domestic and international investors. Brent crude fell 10% for the quarter to close the year at $60 per barrel, driven by concerns over weakening demand and oversupply. Gold is currently trading around $4,620 per ounce, reflecting its continued strength into early 2026. In 2025, gold delivered one of its most spectacular rallies in decades, surging roughly 70% year-on-year, driven by central bank buying, geopolitical uncertainty, and a weaker US dollar. Platinum, meanwhile, is priced over $2,300 per ounce. Its performance in 2025 was even more dramatic, with prices climbing approximately 120%, fueled by severe supply shortages in South Africa, booming industrial demand, and strong investor inflows. Headline inflation for the past year eased to 3.5%, moving closer to the South African Reserve Bank's 3% target. Core inflation, which excludes volatile food and energy prices, edged up slightly to 3.2% year-on-year. The rand strengthened to a 3-year high, closing at 16 Rand 57 per dollar in December. For the year, it appreciated by 12.5% against a weak dollar. It has further strengthened, and today it is trading at 16 Rand 37 to the dollar and 22 Rand to the British pound. Moody's, a key global ratings agency, reaffirmed South Africa's credit rating and stable outlook, citing structural constraints and low growth potential as the blockages to further upgrades. 2025 was a stellar year for equities worldwide, despite geopolitical and tariff-related headwinds early in the year. The MSCI World Index gained roughly 21%, marking one of its strongest performance in recent years. US markets delivered solid returns, with the S&P 500 up about 19% and the Nasdaq Composite climbing 21.5%, driven largely by AI and tech-related stocks. European markets outperformed their US counterparts, with indices like Germany's DAX up 21.4% and France's CAC 40 up 12.8%, while Japan's Nikkei surged 26%. Emerging markets were the standout, posting gains of 35%, with China up over 31% and South Korea's Kospi leading globally with an extraordinary 75% return. The Johannesburg Stock Exchange delivered one of its best years on record. The FTSE Capped Swiss Index rose about 40% in rands and 51% in US dollar terms, making South Africa one of the top performing markets globally. This surge was fueled by booming commodity prices, particularly gold and platinum, and strong performances from resource-heavy sectors, even as the domestic economy remained sluggish. Bonds outperformed equities in the final quarter of 2025, returning 9% versus 8.1% for equities. The 10-year South African bond yield continued to decline, ending the quarter at 8.3%, its lowest level in a decade. This is our first market wrap for 2026. We wish all our listeners an amazing year ahead with only good health and success. Till next time, with thanks, Trevor.
This podcast is for marketing purposes only. The information contained in the podcast or video was for information purposes and does not constitute advice, recommendation, or an offer or solicitation to purchase or sell any funds or strategies to any person in any jurisdiction in which the offer, recommendation, or solicitation to purchase would be unlawful.